What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a look over here at the Bitcoin price chart while also talking about the altcoin market. As we all know, the Russell 2000 is still stuck here underneath its retracement levels. No expansion in sight yet, but of course, still battling there at the very last one. This historically is the signal for the cryptocurrency market to expand off into a bull run. This occurred in 2013, 2017, and in 2021. So we do just sit idly by waiting for something to happen there. And that, of course, is where all the true optimism comes out here for Bitcoin and for the crypto market. But it's been quite curious to look around on Twitter and on X to see what the sentiment of the market is and what people believe is going to come next, now that it has been 6 months since we've seen the top of Bitcoin. Last week, we ran through a bunch of different stuff on structures and reviewed a video that was put out back in November of last year of what sentiment would be like at a peak into a retracement for things like the altcoin market, which of course, as we all know, hit the 702 retracement, rejected from there, and has since been hovering here on top of the preliminary support that was set back there in the crash of 2022. We talked a lot about that last week. I won't go into too much detail on it, but when this idea was theorized back in November of last year, that's where the support would be, back here at the preliminary support of the 2022 crash after hitting a 702 Fibonacci retracement level, which is what we did. That's where we're at, preliminary support. So now what? 6 months has passed. There's never been a time where Bitcoin hits its all-time high like this back in March and then spends this much time waddling sideways. Everybody's kind of at a mix of what's going to come next. And I figured I'd touch on a couple of things that I'm seeing out there on Twitter and then give a couple of my own takes as well. What I am seeing is a lot of people come around without exactly saying it, that what happened with Bitcoin was a retracement, that everything we saw here was all of this right in here, and that the rally that happened in here, which was of near identical magnitude, that we're still just working out one of these whole things right in here, and that essentially we still have like the C19 crash to come next. I'm seeing more and more of that when I'm cruising around over there on X, essentially that, we could see how these things happened in here. 1, 2, 3, 4, 5, back to wave 4, and then C19, that 1, 2, 3, 4, 5, back to wave 4, then C19, right? That after 6 months, right, there's never been a time either with the altcoin market where we get back to these retracement levels and then it doesn't go into what everybody was calling the banana zone, right? There was really 2 shots for that to happen, and we're just way beyond that. Like price action's just not acting like what would have happened in 2017 or in 2021 for it to go off into a banana zone, and that price action is acting much more like what a retracement looks like, and cautions and watching out for these price levels that we do the same thing. Actually, 1, 2, 3, 4, 5, back to wave 4, and then C19. It took 6 months for people to come around, but now I think I just kind of see this everywhere. I'm not going to sit here and argue whether it's right or whether it's wrong, but it's one of those things that where, if you present it during the times where everybody's euphoric, the crowd's just not going to see it. Now everybody's kind of trying to start to see this thing. And while, of course, I definitely do see it, and this is definitely what we were saying back in March and April and February, I have some conflicts with it because of how this market has already played out. And that if we were to get something like that, I think we would actually have to have more upward price action happen in the market first. However, like I've shown in other charts of what actually C19 was, and how when we had the crash happen back in April of this year, I'd characterize it as like, this is similar to like C19. They got a tremendous amount of pushback, but we can find various charts out here in the cryptocurrency market that show what it was like before that moment. That in order for something like this to happen or this to happen, there's typically a moment of irrational exuberance again. Excitement, euphoria, we're good, everything is fine, everybody buys the market, we're ripping and roaring, we're going to be good, and then it just wrong foots the market. The thing about that, though, when something like that happened, is that that is what happened back in February and back in March, is that everybody got that wrong footing happening in there in the market as it went back to its retracement levels and has already plummeted since then. What other reasons might people lean on to justify that this would happen? Well, for the last year, We've been told rate cuts are going to be bullish, but the reality is they haven't been historically. This is all of our cutting happening in here, and you could see that we started cutting right there in that peak a second time after pausing for a couple of months. Again, cuts resumed in here, and then that led to the big splashdown that ended up happening. On TradingView, the Fed funds rate updates on the 1st every month, so it won't be until October 1st that we end up seeing that update to where we have seen the Fed funds rate drop. But of course, reflecting back on all this and this, right, that's where a lot of those conclusions get drawn from. Now, I'm not making this video to truly scare you. I'm actually just making it to say, this is what I'm seeing on Twitter or on X. And this is typically how the sentiment of markets work. When markets get irrationally exuberant and excited, there's no way that we can come down, chastise the bears and destroy them. They're terrible human beings. After prices have fallen down dramatically, well, something's going to happen that's going to make them crash even more. So I better go ahead and sell and relieve myself of all of this pain, because there's most certainly going to be another crash that comes as well. And that way I can at least take advantage of that one in the event that that occurs, right? It typically takes a specific amount of a drawdown and sentiment change for things like that to start occurring. But the problem is that the rest of the market is not acting like what would happen in the event of that coming next. That we're going to crash and then it's going to go raging off into a bull run, because for the most part, we've really already done the crash. Doesn't mean there's still not more working out to have to happen down in here. And little moves like this aren't small. You know, that's 15, 20%, just those little moves right in there. And at this point, this deep into it, after we've already seen the whole others market cap fall 58%, any moves at this point are just painful for everybody, right? Buy the dip, buy the dip, buy the dip, buy the dip. Whoops, not buying the dip anymore. Whoops, what's going on? Whoops, we're going to crash even more. I better sell now, right? But this was written about in the last newsletter as well, that this time is different. And that's the most dangerous words any retail investor can use, but they're typically going to be using it for a narrative. They're typically going to be using it in the terms of, like with Elon Musk and Tesla adding Bitcoin to their balance sheet, this time is different. We've been vindicated. Finally, companies are adding it to their balance sheet. Or when FTX collapsed, this time is different. Or with the Bitcoin ETFs, this time is different. Or with C19, this time is different. It's not going to recover. It's typically narratives that people will say this time is different. But the price action is very different, and the behavior of the market is very different from what we've seen. And that's just even evident right here on the altcoin market, where everybody's pointing to the 2020 and 2016 or the 2017 and 2021 behavior of the market, expecting that back in June we were going to explode, or back in April that we were going to explode. That here we are in September and we're down in here, and it's all like, well, no, we're gonna crash now. I just think we're drawing too much from the past on the one that is happening right now, and that this time is actually different from what happened back in 2020, what happened back in 2017. And I know that to be true because the Russell has not expanded with the rest of the indexes, which is totally different from 2021, 17, and 13. But drawing conclusions of price action from 2019 and 2020's retrace are now going to be difficult as well. But if you wanted to use Bitcoin from back in 2019 and 2020 of what happens when you go back into a retracement, right? What happens? You get near the 702, you pull back down to the 236 support, rally back up to that wave, and then kerplunk it, and then off and away it goes. Well, then where do you stand currently right now on things like others, right? Sitting in here on top of that 236 retracement level. There's your 236. That's where you've gotten back to. The big concern, of course, watching out for that thing, which is all up in here, which would mean there could still be some waddling around happening in here, but having to pay attention to what happens in the event that a euphoria arrives in here. And then this has to do a sea leg like we had for Bitcoin back in 2019 and 2020. Here's a problem with this though, right? Like for your cycle people, block reward having people, if you think that this is coming next, it is so late in the game for the 4-year cycle theory and for the block reward having theory to be having something like that happen at this point. This is 817 days into this thing. Even if you use this peak right in here, right, we're already almost a year beyond that. And we know that the technical top of the market actually happens back here in May of 2021. So we're almost a year and 2 months beyond when something like that should be happening, right? For 4-year cycle theory and block reward theory. And what this would also signal is that everything that did happen for Bitcoin back in February and March was just a glorified retrace. And so, what comes next for Bitcoin after that? I think the only thing people are going to be able to lean on after that is to say, now we're going to do 2020, 2021. And with how this market has reacted so far, I just really, really doubt it. We would just be getting ventured. We just be blurring the lines so far at that point to be pointing to that at that point. But, cycle theory will have been whooped and destroyed by that time because we'd be way over 4 years. We're already at the longest one ever, right? Like now, right at this point, we're now at a point where an expansion has never taken this long to happen before, ever. In here, you can argue this was delayed between like 6 to 12 days. And tack those on. But even at this point right now on September 23rd, well, 12 days beyond September 8th will put you at September 20th. So we're now 15 days beyond. You're already at the longest ever. And everybody's talking about now, yeah, but now we're going to C19 crash. And then, in maybe a year from now, we'll go. Yeah, I just want to present it to you because I know a lot of times when we get out there on Twitter, we get out on YouTube, and everybody's presenting all these ideas and everything like that, justifying it and giving reasons why. My thoughts on why we would just see a retrace happen in this market is because I just didn't think we were going to see expansions happen throughout the United States stock market. And to this day, we haven't. So nothing can be ruled out to say we can't do something like that if an expansion isn't taking place. But I also wanted to show you the things to say, no, that wrong footing that happened in the market back in February and March when the euphoria kicked in, that is really what it was like before the C19 crash happened. And so a lot of this market has already done that. And then we're seeing things like SWI, which are already doing those things that look like recoveries, right? And I'm not oblivious to sit here and say, look, even if this thing happened in here and did something like that, hey, look, there's a lot of slop to go on in here, and there's likely a 35% or so, 35% fall that could happen in here. This is the most volatile market in the world. You like getting 200% in a matter of a couple of weeks? Well, it comes with negative 35% crashes at the same time in 35% ranges. To do things like that after hitting retracements and rallying so aggressively, right? But when I look at it through this lens, this doesn't scream to me, hey, we got the C19 crash coming up next. When I look at things like this, it doesn't scream to me, hey, we have the C19 crash coming up next, because it looks like we've already done it. Like I said, on some of these, there may still be some waddling in here, but I think anybody looking for something massive, it's a hard argument right now. Things I would be watching for are going to be things that we've already talked about, in that this being a range in here and the third range boundary that would be coming in here, and to be very mindful of it. That I think this will eventually head its way back up in this range, but then we are going to be met with an area of caution again. If the market is irrationally exuberant again back there, that's typically a bad sign. If there's a wall of worry there and concern, that's a different story. I do not know how this range will play out. I can just give examples of ranging price action. Everybody wants trends. And we've talked about this many times, that there is team up, there is team down, because people will buy and people will sell. But the one team that there is not team sideways, because people can't sell and make money, people can't buy and make money. And so team sideways is where everybody, both bears and bulls, get frustrated. And when we're in a range, that's where both parties get frustrated, right? I want to sell because I want to buy lower, or I want to buy here because price is going to go higher, but instead price just keeps going sideways. But the thing to be mindful of here will be is that if we get back into these retracement levels, and if we have to build a third range boundary before we can actually get out of here, rather than just shooting out straight away, it's essentially the crash, retrace, reaccumulation structure happening within a range from a retracement, which I show you guys this one the most because this is one that a lot of you can relate to, which were here during that time on the XRP price chart of what we have is 1, 2, 3, 4, 1, 2, 3, 4, 5 for wave 5. 6 comes back up to wave 4 within wave 5, and then we have 7. That completes your crashing structure. This completes accumulation, breaks out of accumulation, back tests the preliminary support, then builds a new range before then breaking out. And when it returns back to the third range boundary, it struggles at the retracement levels again to then continue the range even further. But crash, retrace, reaccumulation, breakout, which is essentially a miniaturized version of what Bitcoin was back in 2018 through 2020. It's a crash back to a retracement, reaccumulation, and then breakout. This is a large-sized one of these. But the context of all of this is what we're discussing, right? We go through crashing structure, accumulation, and then back to the preliminary support. That is exactly what this whole thing is here for the altcoin market. That this is the crashing structure of 1, 2, 3, 4, 1, 2, 3, 4, 5. For 5, back to wave 4 within 5 for wave 6, and then 7. Accumulation with what? The A, B, C, or A, B, C, which is exactly what we had over here on XRP. After 7, returns for A, B, C. Escape, escape, back to preliminary support, back to preliminary support, right? Crashing structure, crashing structure. And so it's rare to have crashing structures that immediately turn around and go straight off into full-blown bull. But what they typically do is go back to the retracements, back to the preliminary supports, build a range, and then go. So regardless of whether you think we're doomed and we're going to spend years down in here and then waddle like this, and then it's just going to be trash for forever, or if you think it's going to be like this, there's probably going to be reason to have concerns in here. But I just don't think they're now. I think we could waddle further in here before that ends up happening. And I think there is going to be reason to take caution here. Because even in a continued range and treating it as a third range boundary, as if a range does continue or if a crash is going to come, that's historically where you're going to do it. That's going to also be that 702 retracement happening in there for that range. But due to our whole structure that we've had in here and how far down we've already gone, I'm going to doubt that we have the C19 crash to come up next. Because I think that is actually what February and March was. That level of wrong footing, that it seems unlikely that there's really going to be something of that magnitude coming up next. And that the reason why I don't favor that we are going to have some big crash come, and that if we're not going to break out now, but if we do have to build a third range boundary first, is that I heavily lean towards that not having to happen. And it's what we just talked about with the crashing structure. It's what we just talked about pulling back. True preliminary supports happening in here. Is that when all of this happened in the cryptocurrency market and that big fall happened for Bitcoin, well, we can go back and look at what Bitcoin was doing and how it completed itself. And it completed itself with the crashing structure. It completed it with a 1, 2, 3, 4, 5, back to wave 4 for 6 and 7, back up. And what did it do? It A, B, C'd to eventually break out. And our preliminary support sits right there in our crashing structure, right? Right there at wave 4, within wave 5, and where 6 resides, right? That's our preliminary support, right? That's this right here, right? That's 6, and then that's 7 after our 1, 2, 3, 4, 5, back to wave 4 within 5. That's our preliminary support. That's what our preliminary support is here when Bitcoin capitulated back in 2018. And then when we go on for all this price action happening in here, what is all this? Eventually, that crashes what? It's to come back to hit the preliminary support because it was left wide open. And so when I see that we've already done that, we've already had what would be that big of a move, and these types of moves already happening throughout the market, I just don't favor it. I think there's going to have to be caution when we get back to the third range boundary within this range, because what we would all be bored and frustrated from is if we stopped here and had to stop, right? And there will just have to be that, hey, look, we're back at the third range boundary. Many times these things can build bigger ranges in here. That's where we're at. I don't know what's going to happen, but we're here. Here's all the examples of how ranges can build. I don't cheer for that. Of course, I cheer. Let's get the show on the road. Let's have 3 months of euphoria. Let's get it going. Of course, that's what I cheer for. But I have to show you these things. But I have to also say, these things sure look similar. And a lot of people on Twitter are now betting that this is what's going to happen. But the context of it was that as well was the retest of the preliminary support of the crashing structure range, which here on XRP in an entirely different time period is exactly what that is. And that's exactly what we've already seen here in the crypto market. So my personal thoughts are we are building a bottom in here. Uncertain if it has to waddle in here first, but I do think we're going to head back to the third range boundary. And that's going to be where we're going to be watching a lot of this to see, hey, can we get confirmation of broader markets saying that we're ready to escape from in here? So I wanted to show you those things, talk more about that 2019, 2020 retrace, what happens when those crashes came. We've done a lot of that stuff already. And to put into context, where that crash for Bitcoin went to back in 2020 when C19 happened, that it was a revisit of the preliminary support of the range that we've already had happen here in the market, just as it did back in here for Bitcoin in 2018, 19, and 20. So hopefully that gave you a little bit to think about. The way I'm operating right now, I'm operating that we're building a base, we're heading back to third range boundaries. I think there's a logical conclusion to draw that we could struggle there. But then at that point, we're going to be looking to macro to see if we're going to have juice to be able to escape out of there, or if this is going to have to be a third range boundary that's going to have to build a larger range. I just don't think crashing down into oblivion is likely at this point. And when we look at things like Ethereum, it also has done the same thing, that it's already gotten back to its preliminary support back in here on top of that range. That's even the same thing that you'd be looking for in the crash for Bitcoin of 2020. So it's like it's already done it. However, there's some assets that definitely have not wiped themselves of that to go back to that preliminary support. I'm not here to FUD it. I'm not here to say buy or sell. But whereas really most of the market has done it, things like Solana still very, very long ways away from it. And hard to say if it's even lower. This one's kind of floating out in the middle of thin air. So we don't really talk too much about this one. But you've definitely already gotten it on, things like Ethereum and the altcoin market cap. So I'm optimistic of where we're at. I think the next move from this range is inevitably out of the range. The big curious thing is how we will treat third range boundary to see how long we have to stay right there. And if this were to get into escape, my bet would be not long. But we'll just have to watch it when it gets there. But I thought for context to understand that big move that happened for Bitcoin back in 2020 was back to the preliminary support of the range, and that all these discussions of going back to preliminary support and going back to preliminary support, well, we have already done just that. So onwards and upwards, and super mega upwards if this Russell thing can get itself out. So as we kick off a new week, I thought I'd show you the things that I'm optimistic about. And again, I think it's a lot of confusion out there because the market is just not behaving like 2013, 2017, or 2021. This is all different. The structures themselves are not different when it comes to things like crashing structures and then coming back to preliminary supports and then building a range and breaking out. Those are normal technical structures, and we have all the examples to show those happening. But it's all very different from what people are expecting when it comes to Bitcoin getting back to the new all-time high or the altcoin market entering into banana zone and 6 months later it hasn't. This is the context and the framework I'm operating with right now, and it's different than what we saw in the past. Doesn't mean we can't net the same positive result in the end, but it also explains away how for the last 6 months, it's been Bitcoin to the moon. And then now suddenly everybody's kind of thoughts are kind of changing and shifting. And it's because things have been very different. But in the end, I think things will be all right. Anyway, we'll go ahead and wrap it up. I won't ramble any longer. This video is already like almost 25 minutes long. I want to thank you so much for watching. Of course, you could check out my newsletter over here at blockchainbacker.substack.com. The most recent one's talking about it, how different this time is, and showing how we're navigating a different game this time. It includes a 36-minute audio voiceover that I recorded. You also get access to all the past newsletters as well if you sign up over here at Substack. Of course, you could check out bcbacker.com, where I have over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. It talks all about different common and effective tools, chart structures, and Wyckoff accumulation and Elliott wave theory. But even in here, a 21-minute video completely dedicated to the crashing structure, which is what we talked about during this whole video. You could check out both bcbacker.com and the newsletter at blockchainbacker.substack.com down here in the video description of this video and all of my videos and live streams. Otherwise, Welcome to a new week. I hope you had a great weekend, and I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.